Very good afternoon. You're watching the newsroom right here on ET Now. I am Ajay Sharma. The market is holding on to the gains. In fact, marching towards 21,350 mark. So there was a bit of a change of hands, profit booking in the first 45 minutes of trade, but that mild pullback was bought into. IT is leading today the charge. Banks are slightly quiet, but the beauty of this market is that this after such a very strong rally, there's no major pullback or profit taking setting in. That is very perplexing. The mid cap, small cap end of the markets are also doing okay. The indices are flat to mild gains, but no major pullback. Abhay Agarwal of Piper Serica is also joining us. He's a specialist in the mid cap side and a stock picker at heart. Abhay, afternoon. Thank you so much for your time. What a week it has been. For a very long time, we have been spoilt of such massive gains in such a short period of time. This kind of a market makes all of us feel that we are great stock pickers and great participants in the market, doesn't it?
Yeah, of course, Ajay. I've been investing for 30 years, Ajay, and I still am again and again reminded that long-term investors should learn to ignore the general market perspectives and market wisdom, because not very far back, Ajay, if you remember, there was a lot of caution, a lot of worry about the markets. Michael Burry was putting on a big short, and people said, look, he's a very smart guy, made billions shorting the market. Crude prices had gone up, and Fed there was a worry that Fed will increase rates, and a lot of investors I saw getting under allocated to the markets at that point of time. And Ajay, we discussed it also about the low participation and anemic foreign flows. So, and now if you look at it, Ajay, the markets have turned on their head. So the people who stayed invested, people who ignored the market noise and said, look, markets have an auto correction built in into that, so they will auto correct. And suddenly, two of the big concerns that you had about election risk, about Fed rate hikes, commodity price spike, they have all vanished. So what is happening, Ajay? We are seeing that a lot of investors, both in India and internationally, who were under allocated on risk assets, are now, I can use the word actually, desperately looking to put on positions, get to fair level of allocations. And I think that is why we are seeing what we are seeing, Ajay, in the markets, that anybody who did the hard work, stayed invested, used the downturn in the market to deploy capital, is finally getting rewarded. So yeah, absolutely. Again, a great reminder from the markets, for all investors.
Abhay, I'll come to your portfolio kind of tilt right now, but I just want to understand one point, the narrative which the market is now taking, that between now and May, when the rate cut in US will start May-June period, which may coincide with state elections here and a case perhaps to rate cut. Do you think this kind of a 6-month period looks pretty decent for a pre-election, pre-rate cut kind of a rally?
No, it does, Ajay. As we have seen, the big two overarching concerns are now out of the picture. The Fed has clearly guided what it has guided about the rate cuts. Commodity price inflation is under control. Domestic consumption is good. About the incumbent government's chances of coming back to the power, and more importantly, for the policy direction to continue in the same direction as it has been in the last 10 years, looking like that. So I would say, I don't think, Ajay, anybody is going to wait for now next 6 months outcomes. I think people are going to rush in and start allocating, making their bets, longer term bets now. And I think that is what is going on, Ajay. When we talk to the foreign investors, everybody's asking for new ideas where they can deploy capital. Some time back, it was, the conversation was about how much to take off the table, how much cash to sit on. But that's all gone in the air now. It's the first time I'm seeing investment managers in Hong Kong cutting down their leave. December is a big month of people going on vacation. But this year, everybody is complaining that they have to stay in office and work on portfolio allocations for the next year. So I don't think, Ajay, anybody is going to wait for 6 months. I think people are making their bets right now.
Turning point which you made, Abhay, because we should not forget, all our calculations, all our academic, stuff can be put to a very massive test when liquidity flows become very strong. Yesterday, Kotak put out a note saying that 2 lakh crore per year is the potential of domestic flows. So SIP, which is gathering pace, plus PPF, that kind of money put together, which is more than enough to absorb any kind of a FI selling, which we have seen in the past too. But this time the tide is turning, FIs are additionally coming back. So FI, DI both together, even for a short period of time, can create a bubble-like situation in the market in the short term. Is it not?
No, I think there are, Ajay, again, we have seen that in any kind of market, there is a bull market and a bear market going on at the same time. So, of course, the theories that become consensus, the stories, they become popular and they get chased and the valuations are ignored and they get to crazy levels of valuation. That will happen in all markets, Ajay. So, more likely to happen now, as you rightly said, because of the liquidity flows when people are just very, very keen to get into stocks. At the same time, the market will always give opportunities where there are sectors which are not performing, underperforming, and those who can stay away from consensus, focus on that, maybe go for a bit of underperformance. There are those opportunities also. But I think to back your point, that liquidity flow which is expected to come in, already coming in, will also widen the markets. I think we will see some very good IPOs, good quality listings happening. As you have seen in the recent IPOs, investors have made very good money. A lot of money has been left on the table for investors. So I think if that continues, we can expect next year to be a year of very good quality, big IPOs, which is very good because it will absorb the new capital that is flowing in, and also it will widen the market for investors.
Abhay, anything interesting which you are researching, which you have added or dipped your feet into or are looking to add in your portfolio in the recent times?
Yeah, Ajay, as you know, our style is to keep looking for small, mid to small cap or slightly large cap names that have where sector has not underperformed, is probably bottom of the cycle, so has been out of investors' radar for a long time. That is where we look for opportunities. We don't always find them, but when we find them, we back them with conviction. So there are two spaces, Ajay, right now that we have built a fairly positive view on. One is the whole agrochemical space, which is crop protection, yield enhancement, and that is where. Again, these are not buy recommendations, but I'm just, and these are stocks in our portfolio. But we have added agrochem names like UPL, Bayer, Dhanuka. We are also getting positive on the large cap pharma names like Reddy's and Divi's that seem to be getting pricing power back in the US and the export markets. And we're also looking at battery companies. So we recently added Amara Raja in our portfolio as a play on lithium-ion batteries, which the sector will grow because of the government's push also on electrification of vehicles. So these are some of the recent names that we have added to the portfolio. Again, you can see, Ajay, we are even in a bullish market, we are very focused on valuations. We don't want to overpay. Ideal situation is we are able to buy growth companies at value multiples. Getting harder, but I think those opportunities are still there.
How have you played IT in your portfolio? That is getting completely re-rated on rate cut, noise coming in, and also that it has not performed a whole lot. Do you have some IT names and any thoughts to get into somewhere?
Yeah, so we have been researching, Ajay. There, our focus has been to stay away from large cap IT names where the business model is still more of time and material and number of people deployed model, because I think that will be a low growth market even with US recovery. We are more focused on looking at mid and small cap companies that are using products that have productized services. As a result, have faster adoption and also catering to specific industries that are growing, like auto, especially electric vehicle space. That is a big space. Banking, financial services, creating new solutions using products, aviation, retail, health tech. So these are the spaces where we are looking at companies. We haven't added any in the portfolio, Ajay, but research is going on, and I think in the next model portfolio rebalance we will most probably add one or two mid to small cap IT names that are product companies.
How have you played power? or have you missed it, or kind of did not play wholeheartedly, but perhaps maybe looking at beyond the power financiers? That's the most kind of obvious play. But beyond the financiers, have you played transformers, transmission companies, wires and cables, etc.?
No, Ajay, unfortunately, we missed it. We had Siemens early on in our portfolio, but we exited, I think, looking back too early. Looking at the valuations, I think we should have stayed on. To be fair, I think we don't have any power stocks in the portfolio, no capex heavy stocks. That whole segment has done very well. I think it will continue to do well. Again, the policy direction is very clear from the government. So we have unfortunately missed that part of the rally.
So, you've looked at the small bank space very nicely. Some of the banks have become multi-baggers. Now again, the market's kind of focus is going towards NBFCs, microfinance, but banks are kind of getting a kind of a cold shoulder right now. Would you look at small bank space, especially the regional banks?
No, I think the space, the market is so huge, Ajay, for next 5 years, 10 years, and it's just going to grow. So opportunities exist for any management that can execute well. For large banks, they have their advantage. So we recently added a couple of months back, Kotak Bank, ICICI we already had in our portfolio. But we think these banks have a unique DNA. They benefit from the size, the market presence. So we have them in the core portfolio as part of our large cap allocation. But I think the multi-baggers will still come from smaller banks. So we have CSB Bank in our portfolio. We have Spandana Spurti for a long time. Some of the smaller names that we believe with management change, the new management coming in, management that has seen much bigger scale. So used to large size and growing these organizations, I think that is a good bet. We see multi-baggers emerging in that space. At the same time, the big banks will continue to do well. I think they have gone through a valuation re-rating, but I think it's about time that value investors start allocating more capital to large banks.
Outstanding. Abhay, always enjoy our conversations. Thanks so much for your time today.
My pleasure. Thank you.
That was Abhay Agarwal of Piper Serica. Let's take a short break on that note. Come back and more news and analysis and stocks moving stories to cover. Don't go anywhere.